Whenever the market falls, I usually see people starting to panic, but whenever I see big red days, I think of discounts. So in today's video, I'm going to be talking about 4 stocks I'm looking to buy if the market sell-off continues. Because as we're seeing these stocks that have done incredibly well in 2020 sell off, I see this as being great buying opportunities for companies that you love that you can potentially get at a discount. So these are the 4 stocks that I'm watching because I think that the sell-off has happened already. They're all down like 5 to 15% from their all-time highs. And these are companies that I would love to add to my portfolio right now. Also, be sure to stay towards the end of the video because there is a stock that I think is a fantastic buying opportunity for my portfolio right now. As I mentioned in my last video, that I am sitting in the most amount of cash I've had in a long time. I think I'm at like 35% of my portfolio. So I'm waiting for some fantastic opportunities. So in today's video, I'm going to be talking about these 4 stocks, talk about my bull thesis for why I like these stocks for a long-term investment, and then I'm going to be showing what I'm seeing on the charts to talk about the entries that I'm looking and give specific dollar amounts, because the question that I always get asked is, whenever I talk about a stock, is why do you like it and when are you looking to buy? So that's what we're going to be doing in today's video. Be sure to leave comments down below if there are any stocks that you guys would like me to talk about in future videos, because I love talking about all the different stocks out there and specifically ones that you guys are interested about. So these are just my opinions. I do have other stocks that I'm looking to buy, but these are the 4 that came to mind as being on a potential discount because a lot of the tech stocks are selling off. So whenever the market has a quick sell-off, the first place that I usually look has to do with blue chips. Blue chips are stocks that are very well established. Stuff like Microsoft, Adobe, all these really well-known names. And the one that I always think about has to do with Apple, ticker symbol AAPL, and that's the first stock that I'm watching as the market falls overall. Surprisingly, Apple is actually down 6% on the year, which is pretty surprising because when I saw the news reports coming out about the earnings report, which I'll talk about in a second, I was very impressed. So I was kind of shocked to see that it was down. But looking at its annual return since 2010, the past 2 years have seen massive moves for the stock price overall. And this has been one of the best stocks to have in your portfolio overall. This is a stock that I do own, so I will disclose that. Looking at its compound annual growth rate, since 2000, it's returned 26.6% a year, which is an incredible return. When I think the overall S&P 500, I kind of forgot the numbers, even though it's on the screen right now, so I'm gonna look stupid if I'm wrong. I think it's like 6% for the overall market. So Apple has been a fantastic place to invest for the past 20 plus years. In their last earnings report, they had their first quarter where they had $100 billion in revenue overall. And 2 things really stuck out to me from that earnings report overall. The first is that they had double-digit percentage growth for all of their sections of their business. So in the past, I've had gripes about the iPhone sales being too big of a part of their revenue sources. But in the past, they've started to expand. The wearables have been a really exciting thing. I do have an Apple Watch and I love it. But all of their parts of their business have been seeing very impressive growth. And for a company that's as well established and a $2 trillion company, seeing double-digit growth year over year is very impressive. And then the second thing that I saw is that the iPhone sales have been really impressive. This was kind of the thing that the analysts were watching going into this earnings report, because going into 5G, it was going to be very interesting to see if the new iPhone was going to be able to take hold. And the numbers that I've been seeing has been fantastic. And the one that really sticks out to me, the sales that the iPhone had compared to Samsung, Apple actually had higher sales for the first time since Q4 of 2016. So Apple has taken the throne of being the top sales for different iPhones, and that's big news. Samsung has been, they don't have the most sexy products in the world, but they did have the volume sold. So it's very interesting to see Apple being able to take that spot as the top sales when it comes to overall smartphones. Looking forward, they have not given guidance for the future, but I think it's okay because they haven't given guidance since the pandemic started overall. So I'm not really worried about that. And then looking forward, their growth potential with the Apple Car, if it actually ever comes out, is going to be huge because we've seen how successful the EV space has been, and a company like Apple, I don't think is going to be screwing it up big time. So that has a lot of growth potential. Looking at the charts, if Apple comes down to the 105 or even the $100 mark, I'm going to be buying as much as possible. Companies like Apple don't go on discount very often. So anytime that I see Apple selling off, I usually see that as a buying opportunity. It is a part of my portfolio and I'm looking to add more as soon as possible. Next up is going to be Beyond Meat, ticker symbol BYND. Looking at its performance, it is still up 20% on the year, but so far in February, it is down 15% from its all-time highs. And Beyond Meat does announce earnings tomorrow. And instead of waiting to talk about it, I always like talking about a stock right before earnings because there are things that I'm looking for, and especially if Beyond Meat misses tomorrow, there's a very interesting area that I'm looking on the charts where I think it's a fantastic buying opportunity. So if we do see a major sell-off, I think it's a huge opportunity. The reason that Beyond Meat is up significantly in 2021 has to do with a lawsuit against Impossible Burger. And what this did is it boosts Beyond because Impossible is probably the biggest competitor when it comes to Beyond Meat. Impossible is expected to go IPO sometime in 2021, but a report like this and the investigations that are going to have to go along with it might delay that even further, and that's why Beyond Meat saw a huge spike, even though that increase in price has been selling off over the past month. So, and Beyond Meat was a stock that had a fantastic 2020, even though they did have some problems with the areas that they were selling to, specifically the restaurant industry. But going forward, the best bull case that I see for Beyond Meat comes with the charts. And whenever I see a stock that I love that has a very easy to identify support or resistance, I think that is a fantastic buy signal. When I'm looking at the charts, the $125 mark is a very solid support. And if we see a miss on earnings tomorrow, if it gets down to that level, I'm going to be buying aggressively, because Beyond Meat has been a stock that I've been talking about for a long time, but I've never pulled the trigger because I haven't seen it at a significant discount. And based off of the 15% that it's down already from its all-time highs, and based off of what I'm seeing on the charts, the $125 mark is what I'm really identifying as being a fantastic buying opportunity. So that's going to be a stock I'm going to watch tomorrow to see what happens when their earnings get announced. The next stock is one of the best performing stay-at-home stocks of 2020 with Peloton, ticker symbol PTON. Currently, it's down 18% in 2021 after being up almost 400% in 2020. There's been some problems with the supply chain, and it's a very interesting problem. This is one of the things that whenever I see a bad headline about a company, I think, is it a problem that's going to be a long-term problem, or is it going to be a short-term problem? And seeing problems with the supply chain, I see that as being a short-term problem having to do with the pandemic. What we're seeing now is that their demand is too high and they're not able to satisfy it in a timely manner. So people want their products and they don't have a way of getting it all out there. They have been investing $100 million into freight and ocean freight methods to try to help this problem. And they've also bought Precor, the company, back in December that's expected to help with that. So this is not something where they're just going to wait and see what happens. They are investing in themselves. They are spending some money to try to fix this problem, because Peloton saw incredible growth in 2020, and I thought they were in a great spot to take advantage of the stay-at-home movement. And at this point, I think this business has really legitimized, because you have companies like Apple that are getting involved with the stay-at-home workouts. You have Nike. And Peloton has been one of the top dogs when it comes to that. The brand loyalty for something like a Peloton is very similar to what I think about with Apple, because people that buy Peloton, they stick with it and they absolutely love the product. And that's why my favorite number has to do with their 96% retention rate. So they're bringing people in, and they do have the subscription model for paying for the classes that brings in recurring revenue. And every time I talk about Peloton, I talk about why I love the subscription model, and there's a reason why something like an Adobe does so well, because yes, you have the upfront costs that you bring in as revenue, but you're also having more revenue coming in for the future. And so I love the long-term growth of the company. The revenue was up 128% year over year. They have an extremely low churn rate, which is the people that leave the platform. So overall, I love Peloton for a potential dip buy. Looking at the charts, the area that I'm looking at is around the $98 mark, which I think is a great place to buy in. And I'll be watching to see what happens going forward, because at this point, it is down almost 20% this year. So if we do see another major market sell-off, this could come down to that level, and that might be a fantastic buying opportunity. So that is stock number 3 that I'm looking to buy if the market falls further. And the final stock that I'm going to put on this list is the first stock that I fell in love with, and that's going to be PayPal, ticker symbol PYPL. And before I go in and talk about PayPal, I will say that anything I really discuss about PayPal can be applied to Square, ticker symbol SQ. I have nothing bad to say about Square. I just personally like PayPal because it's something that I use, and it was one of the first stocks that I bought, so it has a special place in my heart, and hopefully a special place in my portfolio if the stock falls further. PayPal is up 13% in 2021, but has recently been sliding from its highs of over $300 a share. Part of that comes with the now connection between PayPal and Bitcoin. Bitcoin has had some very volatile days, as we kind of expect at this point. And since PayPal has allowed users to buy and sell Bitcoin on the platform, they've kind of been tied, because as Bitcoin does better, you expect a business that's something like a PayPal to do better as well. But when I look at it, it has nothing to do with their overall business. And so that's another question that I look at. When you have a fall in the stock price, is it something that's their fault, or is it something that's kind of out of their control? And so I think PayPal has one of the most solid businesses out there. They saw a 72% jump in new users year over year, and they have aspirations of growing to 750 million users in the next 5 years, which is a plan that they announced during their investor day, with the eventual goal of hitting 1 billion users. Is that very realistic in the short term? No, but I do like the plan that they've put out to try to get to 750 million and then eventually hoping to get to 1 billion. So they have a lot of big growth aspirations, and I love that about a company. They do have a long way, considering they only have 306 million. I mean, I say only, but that's a lot of people. But compared to the 750 that they have for their target for the next 5 years, they do have a long way to go. But I love PayPal as a business. It's seen incredible revenue growth over the past couple years, and they've recently been improving their net margins, which is one of the metrics that I look at to see improvement for a business overall. So, and looking at the charts, I think it could be a decent buying opportunity right now, because we do have the gap fill that just happened today. And so if I saw that as a buying opportunity, I might buy in right now. But the reason I'm going to be waiting potentially is I think that the market is going to sell off a little more this week, maybe going into next week. So if it falls further, I will see that as a buying opportunity overall, but I'm going to be watching. But I wouldn't feel bad about buying in right now if I had to. So overall, these are the 4 stocks that I'm looking to buy if the market continues to fall. These are stocks that I love. And I think it's very important to talk about the stocks that you're looking to buy, because as the market falls, there are different types of stocks that you're looking for. At the beginning, you're looking to bolster your portfolio with well-known blue chip stocks that you're not worried about the short-term chop. You're looking for a company at a discount that has fantastic outlook going forward. So that's why I have stuff like an Apple on there. Buying Apple at a discount is always a good thing in my mind, and so that's going to be a stock that I'm going to be watching going forward. Let me know what stocks you guys are watching as the market falls overall, and let me know if you've bought anything this week from the dips that we've seen on the overall market. Thanks for watching, and I will see you in the next video.